cash. Ensure that it's a bank transaction.
Traceable.
You have a slip to show that this transaction really happened.
Yeah.
Because even if there will be some other issues in the future, you are able to verify the transaction through documents. So anytime you're paying for anything, ensure it is something that you have a slip. It is, and ensure that maybe it's going through the right channel, like the bank, where you can have a statement to prove that really I paid this person. You can deposit to the bank, or you can do a bank transfer. They're better.
Na ukifanya M-Pesa payment, kama
M-Pesa
iko
payment,
within the limits.
Okay, M-Pesa you could do, because you will have at least an M-Pesa
Traceability.
statement.
Okay, all right.
Yes.
Okay, so first ni kwanza mimi ndo nilipe hiyo deposit, alafu nyinyi mlipe hiyo 2.5 directly to the vendor.
Yes.
How long will it take? Mkishaangalia makaratasi yangu muone niko sawa, tumeagree, I qualify for 2.5, nishapeana 500,000, is it instant?
I think we are getting deep into mortgage now. Because now the mortgage process is like this. First, we'll get an approval. Tukwambie, you qualify for 2.5.
Yeah.
We approve. After we request now for the documents, the pay slips, we'll ask for several documents.
Yeah.
But it's documents that are available.
Yeah.
Si vitu zenye utaenda ati kukosa kupata.
Yeah.
So, if I approve for you a mortgage, now tell you I have approved. It means now it's when I'm telling you, go and pay deposit. So you don't pay the deposit without having an approval from the bank. A signed offer, where you sign an offer with you telling you, umeapproviwa hii amount. So tukisha kuapprovia loan, sasa unaweza endelea kulipa hata deposit.
Okay.
But now, there is a process. Remember, it's a title deed we are dealing with here.
Yeah.
So we also need to consider that price. Kunauziwa 3 million. Is that property really worth 3 million?
3 million.
Okay.
Oh, okay.
So we will do some valuation. Valuation of that property.
On whose cost?
It's
On whose cost?
On your cost.
Mine!
Yes. So when we are talking of, we will get back there. Just to maybe we should just start from there before even we get to after I approve what are the processes.
Yeah.
Now, for you to own a house.
Yes.
For you to own a plot, for you to construct a house, the cost is not just the mortgage, the loan.
Yeah.
All right.
Yeah.
There are other costs that are involved, and when you're targeting buying a property, you need to think of all the costs that will be involved with that financing.
Yeah.
So if I want to buy a house, what are the other costs involved? Kwa sababu nimenunua nyumba, yes. For me to get the title deed, lazima kukuwe na kitu inaitwa transfer. Ilikuwa kwa jina yangu na it is coming to Ivan Mwangi. So for it to come to me, there is that cost. There's a transaction that will go there. So there is something we call legal costs. Hapo kuna wakili, kuna kitu tunaita other costs like stamp duty. Hiyo unalipa serikali. For any transfer that is done, you must pay for stamp duty.
Okay.
So that is the stamp duty cost. For me to know that this property is worth 3 million, I don't just wake up. Someone doesn't just wake up and sell at 3 million.
Yeah.
So the bank will need to value that property.
Okay.
Get a professional opinion on the value, the actual value of that property. So that's a valuation cost.
Yeah.
So we are at cost number 3. If I own that property, I will need insurance for life for me in case I pass on and I have a mortgage within the bank. Do people come to sell that property? No. So I need to have insurance on that property. That is life.
Okay.
Again, in case it burns, kuna moto, kuna flooding, kuna natural calamities. Is it covered? And so there is fire and life insurance. So that is the insurance bit of it.
Yeah.
If I was to do some deposit, that's some cost for me.
Additional.
Yes.
So it will be more than the 500,000.
No. Yes. Now, it will be the deposit plus
the other cost.
All other costs involved.
So mtu asidhanie ni hiyo 500,000 peke yake. So so now when all that process hiyo kuvalue huwa inachukua muda gani ndo ukue now ready to give the money to the vendor?
Now at least umejua kuna cost.
Nimejua kuna vitu na they are mine.
Yes.
Okay.
So after sasa tumesha approve loan, you will sign an offer to accept that yes, I am accepting the bank's terms on this loan.
Okay.
So you accept the offer. We usually give you 14 days or that. It depends with how soon you want it. So the sooner you sign, the better. So after you accept the offer, now that's when we start counting the time. We will do valuation of that property through a bank's appointed valuer.
Yeah.
So that will take between 7 and 14 days for them to visit the property, do photos and whatever georeferencing and everything to ensure that this property is actually good for the bank to finance.
Okay.
Then after that, you sign that, we will get now to the transferring bit of it.
Aha. Okay.
Hiyo ni the legal bit.
Okay.
Depending on where it is, it's the location, the county.
Yeah.
So it might take between 45 days, that legal process, up to 90 days, depending on where it is.
Okay.
So it's a process.
Okay.
So
Clearly.
we will do that process. After we are done with that legal process, now it's when we'll pay the money
to the vendor. Great. So I want to look at some questions online in like a minute or so, but before we get there, there's always a thing. Okay, sasa kama nanunua hii nyumba na niachwe nikilipa bank 25 years, si niendelee tu kulipa rent. Isn't this just another form of rent that I'm paying to the bank? That makes people think, what's the point of a mortgage then? Because nalipa bank rent, yenye ningekuwa nalipa landlord.
Now, well, we can't say that renting is a bad thing, and we cannot say that a mortgage is also a bad thing. The question is, what are your priorities today?
Right.
What are my priorities? Am I looking into a stable house, a home, where I can be living at? Maybe I'm doing business. I'm sure I'll be in Nairobi doing business for maybe the rest of my life, or even if I have to do other business, other places, most of the times I'm in Nairobi, or whatever it is, the place that you are in. So if that's the thing, do I really need to pay rent, or do I need to just own a home where I can be sure that this is my property? So that is one priority. So if that is your priority, then what kind of a house are you looking at? Those things that we mentioned earlier. But the issue is, in this case, am I better off renting, or am I better off owning something? Why owning? Because if I own it, you can consider maybe hii rent unalipa pale ni kama yenye utakuwa unalipa mortgage. And by the way, that's what you need to consider very importantly. How much rent am I paying? I'm paying 20,000. If I want to buy a studio apartment, how much will I be paying? Maybe the same 20K.
Yeah.
So which is better? The money getting in someone's pocket, and it's not sorting you out in any way.
Yeah.
Or you getting to pay the bank and owning something.
The home is yours.
It is yours.
So the peace of mind should come with knowing you're paying, but it's yours.
It is yours.
It is yours.
Yes. But now again, if I'm employed and I'm moving around, maybe I'm not yet stable. I'm not feeling like I'm very much stable. I could say, rent out today as I save towards owning a property at a future date.
Right.
Because I know at that time I will be able to stabilize. And again, I will have raised enough cash towards owning my own home.
Okay.
Yes.
So there were some times you had said there are certain packages you'll get only if the house is for residential. So what if I take a residential home, agree, we've done all those things, alafu somewhere along the way, niamue kuirentisha. I don't live there. I move out to somewhere else. Do you follow up?
Yes. Okay. We usually conduct visits to our customers.
Okay. Kuja kwangu bila kuniambia.
Si kwa nyumba. Sana kama ni wa biashara tuna visit. But basically some of those things may be out of our control.
Okay.
But still it will be, maybe, remember when you are buying it is a residential house. So it should basically be for that
residential. So it's not allowed to change along the way. All right, good. So let's look at some of the questions online. It's a very technical topic, but we are happy so far. Unaifanya tuielewe. I'm almost buying a house here in this conversation. Alice pale anauliza, can interest rates increase after I've already taken a mortgage? Okay. Wacha tuone swali nyingine. Thank you so much, Alice, for being with us this morning na kuuliza maswali ya interest rates and whether they can change. Alafu pia kunaulizwa, how can I calculate the total cost of my mortgage before applying? Hiyo mlisema mnatufanyia, si ndio? All right. So I can see a lot of questions are coming with the interest thing. So I'm going to allow you first to talk about interest and then we answer those questions. Alafu naona Andrew pia anauliza, if I work in a microfinance bank where my pay point is the microfinance bank, can I benefit from the mortgage product? Okay, Andrew, good question. Una smile hapo, hiyo najua uko na answer ingine moto sana. Trevor anauliza, is it possible that the loan can construct an apartment? Then the bank takes some percentage of the rental for a certain duration of time, especially when you finish repayment.
Okay.
Okay, good. So I think we can start with these ones that are not touching necessarily on interest.
Yeah.
Ndio sasa nikupatie chance ya kuexplain interest vizuri. Mumo pia alikuwa anauliza just a quick one, for net salary of 100,000, what would be the qualified loan repayment period and amounts, assuming I don't have other obligation. Hana madeni ingine, sijui chama, sijui sako, sijui what. Alright, so huyu ni mtu ambaye after kila kitu imekatwa anabaki na 100K.
Okay.
Alright, thank you Mumo for that question. Maybe we can start there.
Yes.
Yeah, and I can see time is really moving. Yo.
Okay.
Alright, so let's start with Mumo. 100K net.
Yes.
Anaweza qualify for how much?
Okay.
Na analipa payment period and amounts, assuming I don't have what? Other obligations.
We will not be doing the calculations here, Mumo, but just to tell Mumo that yes, what we consider is that net pay. So how much can we commit? Because we don't want to commit 100% of your salary. Otherwise tutakuacha bila kitu.
True.
Na hiyo itakuwa mbaya. So we are saying the much we can commit is up to 60% of that salary. But it depends na Mumo ako employed wapi. Sometimes your employer will determine how much you can commit to one's loans. Yes, employer wako akwambia hapana. Because of the kind of job we do, there is a status. So the much we can commit is 30% of your pay. So if that is what the employer is saying, that is will commit.
Also inakatangwa direct.
Kuna hizo zenye tunakata direct na kuna zenye tunakata from my account. So that's what I'm saying, depends with the employer, that's number one. But if he is employed in companies we don't have MOU with, we call it an MOU. So MOU ni mahali tumeagree na employer that tutakuwa tuna finance watu wake. Sasa employer na sisi we will agree how much can the employee commit towards getting a facility, a mortgage in Co-bank. But if you don't have an MOU with them at all, up to 60% of your net pay is what we will commit. Meaning, what we are saying is, committing inamaanisha 60%, which is 60,000, ndio utakuwa unalipa nayo mortgage kwa bank.
But is it a must? Can I come and tell me I'm willing to commit only 20K?
Yes. Sasa naambia kama hiyo ndio net yake. Maximum sisi tunaweza commit, the maximum is 60. But you can choose 20, 30, anything.
Okay.
So from there we will calculate now what is the mortgage amount that you will qualify for from that repayment amount.
All right, great. So that's also a conversation needs to further with you, but you're okay with me telling you how much I'm willing to commit from my 100K, and you'll give me a plan for that. Okay, Trevor, ule wa anataka construct apartments, hiyo loan mnaweza nipatia, mnaweza mpea mortgage ya construct apartments, that has to be multi-millions. Then the bank takes some percentage of the rental for a certain duration of time, especially when you finish repayment.
Okay. Yes, we could.
Okay.
But we are not considering only the rental income that will come from that facility. If you look at the kind of rental income that you get, it might not be able to pay your facility. So what we do, you must have some income today.
Besides the rental.
Let Trevor understand that today he needs to have some income that's coming in. So from that income we determine how much can he commit. And from that we can say we want to project partly the income yenye tukijenga hii nyumba ikiisha tunaweza pata, maybe it's a rental apartment of 500,000. So we can commit part of it. Because we are not sure if you build today that the houses will be fully occupied. And so we will commit part of that rental and then combine with your income that you're earning today. So key thing, you must be earning some income.
But does that fall in those people you called the corporates? Because
not really.
As a young person, mtanipea pesa ya apartment, ni construct.
Unajua inadepend ni apartment gani Kuna nyumba utasimamisha hata ya maybe 10-15 million, it will be there. You can be doing rentals which are not necessary even going up.
Naweza target karibu na kampo mahali.
Yes, unaweka tu bed sitters hapo ni nini. So basically usione kama ati muyouth haizi fanya apartments or things for rent. But we must have income today.
Besides the rent, the residence or
so we are not basing it on the rent alone.
Right. Okay. So now I want you to talk about interest.
Okay.
There are a lot of questions on interest.
But before then we could answer the
microfinance. Okay. Yes, so alikuwa ameuliza if I work in a microfinance.
So yes, we could, but you see what we are saying is you might not be able to change your pay point from the microfinance. But you need some commitment now to undertake that. You will be paying us. So yes, we will we'll be able to consider them because there are some employers who will not allow you to change your salary from here.
Yeah.
So we don't lock you out.
Yeah.
But it's on an exceptional basis. But yes, we can finance.
Okay.
Yes.
Great. Now let's talk about interest.
Yes.
We have about 10 minutes.
Okay.
And I know this is the number that changes everything. Mtu anasikia ile interest naenda kuchajiwa for that mortgage. Wacha ikae.
So, interest rate.
Yeah.
This is the cost of borrowing.
Okay.
The actual cost now. We talked of the cost of buying a property. Now there is the actual cost of the loan that I'm giving you. So interest rates is the cost of borrowing. And now, as I mentioned, we have, let's get to a fixed interest rate, the types. We have two types where we have a fixed rate and a reducing balance rate. You can call it a floating rate. So let's start with the fixed. The fixed rate means I'm giving you a loan of, let's even say 1 million.
1 million.
1 million. And I've given you a period of 10 years. Then what it means is I'm giving you a loan of, and the interest rate, we have talked of the loan, we have talked of the period, then let's get to the interest rate. Say even 13%, 10%, hata tuweke 10%. So it means, tumeweka vitu tatu. Loan amount, loan tenor, and the period. And the loan and the interest. Vitu tatu.
So the loan amount is 1 million.
Yes.
The duration is 10 years.
Tujipee interest rate hata hiyo KMLC 9.5%. Now, fixed rates mostly are not, they are fixed. That's what we mean. It's just fixed. So I'm giving you a loan to pay a fixed interest rate for a period of time.
So 9.5% of the 1 million.
Now, for 10 years.
So, ebu tutoe 0.5, tuseme ni 9%, ndo tufanye hiyo hesabu hapo.
Tuweke 10.
So, 10% of 1 million, sindio? Hiyo ni how much?
That will be 100,000. 100,000, 10%.
10% of 1 million is 100,000,
Yes.
sindio? So, hiyo ndio interest.
So, for the loan tenor.
For the 10 years.
Yes. So, it will be how much?
So in total nikimaliza hii deni yangu nitakuwa nimelipa 1.1.
Hiyo ni kama unalipa within 1 year. Ukilipa within 1 year, remember tumesema 10 years.
Yeah.
So hii 1 year utalipa 10%, which is 100k. So if it is for 10 years, it is how much? It will be 1 million.
Yeah.
So I'll give you 1 million and you pay an interest rate of 1 million because that is the tenor we have agreed on. Tumeelewana?
Yeah.
Because what it means, pia ile repayment, nikipea 10 years, repayment will be very, it is just
kidogo.
Yes.
Yeah.
If I give you 2 years, then you will pay very little interest, but a very
Miss Jela, because then where is your money? Kama nalipa 1 million.
Unalipa then utalipa 2 million. The principal you borrowed.
Oh, so mbona unasema na
the principal.
So, gani hivi nashindwa.
The principal you borrowed 1 million.
Okay,
na interest ya 1 million. Remember I've given you time.
Na venye umejitetea.
Hiyo ni fixed interest rate.
So in short ndakuwa nimelipa 2M.
Yes.
But within a period of 10 years.
Of time, of course.
Na kama ina float yenye si fixed.
Yenye si fixed inaitangwa reducing balance. Now this is where most mortgages lie on. So we don't really have mortgages running at a fixed rate because it is very expensive. That fixed rate, if it's because a mortgage has a longer tenor, mostly it will be very expensive for you to pay a fixed rate. So let's get to the reducing balance. Reducing balance means I borrowed 1 million for 10 years, which is 120 months. Sawa? Month 1, nalipa, there is a repayment that I'll give you. Hiyo repayment inakuwa na interest na kitu inaitwa principal. Nilikopa milioni 1. So kwa hii repayment nalipa every month. Say ni 20k. Tuseme unalipa 20k every month. So kwa hii 20k kuna principal component yenye inalipa the principal I've borrowed na kuna pesa inaenda kulipa interest.
Okay.
So kama tuseme month 1 umepunguza loan na 10,000. So itakuja
990,000.
Inamaanisha next month ukilipa loan, interest yenye utalipa itakuwa ya hiyo 990.
Oh, si tena ya hiyo 1 million.
So ile nyingine ulikuwa unalipa ya 1 million.
Through.
Hii nyingine inaenda ikipungua. So that's why the mortgage that is the kind of interest rate we offer. It is good for you as a customer.
Option. Inaende kipungua.
Yes. Okay. And now when we get back to KMRC, the one that we mentioned, it has a fixed rate. Fixed ni kusema, hii rate haitawahi change. Unaelewa?
Yeah.
Then ndani yake iko na reducing balance, which is now very good for you. Inakwambia, even if the markets forces of demand and supply changes and other loans interest rates change, your mortgage will remain at the 9.5 interest rate, but it will be on reducing balance.
So it's a fixed rate that you're paying, but it's on reducing. Ukipunguza hii month, next una...
So that is why that product is very, very good for our clients.
So going for the option of reducing is better?
It's always better, and most in the market you won't really find a mortgage which is on a fixed rate, yenye inakwambia yenye ulikopa unalipa interest. Like, it is very rare for you to find that.
Okay.
Yes. There was a question.
Yeah. So I want us to go back to the question. Yeah, mwenye alikuwa amuuliza about the interest rates. Kama so maybe they'll put for us the questions back on. But as we sort it out and get there, what are those? Oh yeah, we actually have it. Can interest rates increase after I've already taken a mortgage?
Good. I think now that what we've just explained will really answer this. We are saying for mortgages, if it is now this one for residential purpose, KMRC specifically, it will never change. It will be 9.5 on reducing balance. But now, for people who are doing the commercial properties, we are doing warehouses, person doing a church, the person doing rentals, the person doing anything business that is getting you income, then that interest rate is bound to change. If it is on, because it's on reducing balance, so it will be affected by the forces of market, demand and supply. Yes, but you will always be notified by the bank prior.
Okay.
You will be given a notice 1 month prior. Yes.
A common mistake we make when first-time buyers or when you're going for mortgages?
Well,
Kama young people?
Maybe the most common mistake is you come to the bank and ask, how much do I qualify?
That's a mistake.
You see, I mean, not how much I'm qualified for. Yes, how much? What is the maximum? Not how much.
Oh, what is the maximum?
Yes, sorry. Yes, what is the maximum I qualify for?
Okay.
Unaona?
Okay.
So unataka kucommit your whole salary, whatever match you can qualify for.
Okay.
I would say, if you ask such a question, yes, I will tell you this is the match.
Yeah.
But the question is, have you considered the costs, the other costs I mentioned?
Yeah.
And how stable are you in case of emergencies and anything that happens between?
Yeah.
So I think the issue here is first consider everything.
Yeah.
Everything that is involved. I mentioned of the costs. There is that interest rate bit of it. Where am I buying the property? Is it for business? How much is it going to raise as rent? So before I come to the bank and say, I want to commit all my pay, I should have considered everything else that I need to take care of before even I pay this one.
Right. So the maximum that I can get doesn't mean that is what I should go for.
I wouldn't really advise for you to go for that.
Okay. The other question then becomes, should I then get a home to live in or invest?
Well, it all depends on your priorities today.
As a young person,
yes.
Niko 24. Ni lazima nikuwe na home yangu ama ni rentishange nikipiganga mabizi?
Tujiulize number one, nalipa rent pesa ngapi mimi?
Okay.
Kama nalipa 30k, na naweza pewa mortgage yenye nalipa 18k, which is there. Na naweza pewa mortgage na nipate nyumba yenye nalipa 28k. Kwa nini niende ku rent?
Okay.
That's one. Pia, I'm looking at, kama nataka kuinvest, yes, you can invest. But the question is, what is it that I'm getting from this investment I'm doing? Is it worth the hassle?
Yeah.
Comparing with the loan repayments that I'll be paying, can that really be compared? Like, can I compare the rent? I need to compare rent and the mortgage repayments. And when I own this house, there are other costs with the ownership. You do renovations, you'll pay for water, you'll pay for electricity, those things. So I need to consider all those things as I get into this investment. So you can invest, yes, today, because you could also buy one, and it depends on your income.
Yeah.
You can come and I'm telling you, you qualify for 5-10 million, and you would opt to just live in a studio of 3 million and buy other 2 studios, which will help you pay the mortgage.
Right. Okay, so in 20 seconds, tell us why your credit history is very important. Kama nilikuwa na deni ya 500 nikazungusha hizo digital apps, itaniharibia my chances.
Yes. So credit history is very important.
Yeah.
You need to be very disciplined in how you're paying your facilities. Whatever amount you buy, I mean, you take as a loan, whatever it is, you need to consider repaying it, because with the bank does something we call risk rating. We are rating you depending on the risk. How risky are you for me to give you my money as a bank? So the credit rating will be very important, a very important consideration towards giving you that loan facility. So if you have some borrowings, you need to organize yourself. It doesn't mean you will not qualify if you pay, you borrowed a loan and you didn't pay, but you need to repay it and consider all the other obligations that you have, ensure that all of them you pay.
All right.
Yes.
Maliza kwa kuongea na the youth directly, wale ambao wanakusikiza zaidi, wapatie tu a heart to heart about home ownership and mortgages.
Thank you. So home ownership and mortgages, it is the right time for you because you have a lot of time. You know, we are saying the loan is running for 120 months, 25 years. So you have the time and you can spread the repayments for a very short time. But before you get there, you need to consider very important things. How much am I earning? What is my income today? Number two, how much am I willing to commit towards that loan, getting that loan facility? Number three, what are the costs that are coming with me buying the property that I want to buy or the constructing the property I want to construct? Number four, have I saved enough in terms of my emergencies and any costs that will come with it? Do I have those costs with myself? And number four, how secure is my job? How secure is my business? In case something happens to my business, will I be able to continue repaying that facility? But I want to welcome all of you to our cooperative bank, branches. You can visit any of our branches and you get the advice that you really need in terms of mortgage, financing. So just visit us and we will be able to give you the best advice for that. When you're investing in properties, then you are sure of what kind of properties you're investing in. And again, just to remind you, you can get all the listings of our properties at our website, the Coop Bank website. You're able to see the kind of properties we have that are already vetted by the bank and that you can really buy from. Thank you very much.
Thank you, Ivan.
Yes.
I think I'm convinced. Maybe I'm going to be your next client after this. Tuongeni you might attend. But I hope young people have learned so much about mortgages. Thank you for breaking it down. It sounded very simple and digestible. And tumeona manyumba si zile za 100 million peke yake. Kuna affordable homes that young people can start with as they grow. Sindio?
Yeah.
All right, thank you so much. Always a pleasure being here with you every single Friday. Tutakutana tena next week with a lot more here on our weekly youth webinars powered by Coop Bank. Until then, have yourselves a fantastic weekend. Goodbye.